Hi, I'm Suzy Rhoades with PassMasters. In this video, I am going to discuss questions you can expect to see on your Series 65 exam. I'm going to be covering questions related to Section 1 from the content outline. September 1st, 2023, NASA published for the very first time ever a study guide for the Series 65 exam. It is full of useful information. I would like to show you, as it relates to Section 1 of the exam, exactly what the content is that will be covered. You can see from NASAA's study guide, Section 1 is Economic Factors and Business Information. It is 20 questions out of the 130 questions that count on your exam. This is a challenging section for the exam due to the vast amount of information they expect you to know for 20 questions. So don't blow it off. I think that because it is the smallest section of the test, students oftentimes go, oh, I don't need to get those questions right. I always want you to get every question right. So let's look at it. Economic factors and business information, 15% of your exam. We learn about, within the PassMasters course, basic economic concepts, business cycles, monetary and fiscal policy, global and geopolitical factors, inflation, deflation, interest rates, yield curves, credit spreads, economic indicators, gross domestic product, employment indicators, trade deficit, balance of payments, consumer price index, financial reporting. You have to know a little bit about accounting. It's like Financial Accounting 101, financial reports, income statement, balance sheet, statements of cash flows, auditor disclosures, corporate SEC filings, annual reports, accounting fundamentals, audited versus unaudited financials, cash versus accrual accounting. Another topic, analytical methods, time value of money, internal rate of return, net present value, descriptive statistics, differences between mean, median, and mode, ranges, standard deviation, alpha, beta, and Sharpe ratios, correlation, financial ratios and their uses, current ratio, quick ratio, debt to equity ratio, valuation ratios, price to earnings ratio, price to book ratio, types of risk, systematic risks, unsystematic risks, opportunity cost, capital structure, including liquidation priority. So that is what we cover within the PassMasters course. So the PassMasters course is broken down into topics. Each topic has a PDF. Each topic has a video where I explain what is in that PDF, and then you have a review quiz for every topic. So within our course, for Section 1, you have 7 topics. I know within here there's 4, but I'm going to break down basic economic concepts into 2 different topics. Financial reporting is 2 different topics. Analytical methods is 2 different topics. Types of risk is 1. 7 topics for this section total. We're going to take the Section 1 exam from within the PassMasters course. Let's check it out. Erica has a goal of portfolio diversification. Which pairs of assets would best meet this goal? Assets M and N with a correlation coefficient of negative 0.84. Assets J and K with a correlation coefficient of positive 1. Assets A and B with a correlation coefficient of negative 0.5, assets X and Y with a correlation coefficient of positive 0.67. So the correlation coefficient measures how much do these assets move. If it's positive 1, they move perfectly together. If it's negative 1, they move perfectly apart. So the more negative the correlation coefficient is, the more diversification you will find. So you want to pick the answer that has the closest to negative 1 for the correlation coefficient. So you choose what you believe is the correct answer, click check answer. We got it right. You can always click show explanation and read the rationale, or you can listen. Erica has a goal of portfolio diversification. It's me. So all of our questions have a full audio explanation for you. When the government spends money to stimulate the economy, this is referred to as which of the following schools of economic thought? Monetarist, supply side, Keynesian, or classical? It is Keynesian economic theory that believes that increased government spending is the key to get us out of a recession. Foreign and domestic debt share many similar risks. Which of the following risks is not common to them both? Interest rate, political, repayment, exchange. So we're looking for not common to them both. All debt has interest rate risk. Political risk, generally we talk about political risk in a foreign country, but it is possible to have political risk domestically. Repayment risk, exchange risk. That means exchange rate risk. Which one has exchange rate risk? The foreign debt only. So exchange rate risk is not common to them both. Which of the following is not a lagging indicator? Money supply, average duration of unemployment, ratio of consumer installment credit to personal income, total amount of commercial and industrial loans outstanding. Lagging indicators take 4 to 6 months to reflect where the economy is, so they lag behind the current business cycle. Money supply is a leading economic indicator, forecasting where we are going. When are you most likely to encounter deflation? Deflation, when things cost less, when there are too many dollars in the economy, chasing too few of goods, when interest rates are increasing, when the economy is expanding, when the economy is in a recession. So A describes inflation, one of the root causes of inflation, too many dollars chasing too few of goods. When there is inflation, it is often found that the Federal Reserve Board will raise interest rates. When the economy is expanding, we are more likely to see inflation. So the answer here, when the economy is in a recession, you are most likely to encounter deflation. Let's say housing prices would go down in an economic contraction. Remember, a recession is at least how many quarters of decline in gross domestic product? At least 2. Which type of auditor's opinion indicates that the company's financial records are not in accordance with U.S. GAAP and contain grossly material and pervasive misstatements? Disclaimer of opinion, qualified, adverse, unqualified. The worst type of auditor's opinion that you could get as a publicly traded company would be an adverse opinion. An adverse opinion indicates that the company's financial records are not in accordance with U.S. GAAP and contain grossly material and pervasive misstatements. An unqualified opinion is the best opinion. Sounds funny, I know. Tangible assets like gold and real estate, when added to a portfolio, help to reduce which specific type of risk? Tangible assets, inflationary risk, business risk, financial risk, interest rate risk. Business risk is investment specific. Financial risk, also called credit risk or default risk, has to do with the financial health of a company. Interest rate risk is a type of systematic risk that is unavoidable, found primarily in bonds due to their fixed interest rate, and preferred stock, because preferred stock does have a fixed dividend rate. That leaves us with inflationary risk. So gold and real estate historically have been a hedge against inflation, kept pace or outpaced inflation. Can't guarantee that they will in the future. Your client owns 10,000 acres of raw land and is having a hard time finding a buyer. This is which type of risk? Interest rate, liquidity, inflation, or market? They're having a hard time finding a buyer. That is liquidity risk, also referred to as marketability risk, when something's hard to sell. Liabilities and assets are found on the balance sheet, auditor's disclosure, income statement, or statement of cash flow. The test does want you to know some things about accounting. They really do want you to know what is on the income statement and what is on the balance sheet. The balance sheet includes what the company owns, those are their assets, and what they owe, which is liabilities. So assets minus liabilities equals shareholders' equity. The balance sheet equation is assets equals liabilities plus shareholders' equity. Assets and liabilities are found on the balance sheet. Yes. In which accounting system is the sale booked when the invoice is created? Cash, future, present, accrual. So we have two systems of accounting, cash and accrual. The accounting system where the sale is booked when the invoice is created, regardless of when the money is actually received by the business, is called accrual accounting. Ruslan is recommending that his client purchase an emerging market foreign currency fund. He must make sure that the client understands that the following risks apply to this investment: liquidity risk, exchange rate risk, political risk, market risk. Well, this is a very risky investment, Ruslan. Your client must have a high risk tolerance. They must be an aggressive investor. You know for sure that this is going to have exchange rate risk. That is 2. Does that help us at all? No, 2 is in all of the correct answers. So is 3. So political risk, yes. Foreign government coup, let's say. Liquidity risk, emerging market foreign currency fund, might be hard to sell. And market risk, well, anytime you're invested in a security, you have market risk. So Ruslan must make sure that the client understands that all of these types of risks will apply to this aggressive investment. Discussion related to repealing the tax-exempt status of municipal bond income is an example of financial risk, business risk, market risk, legislative risk. This is an example of legislative risk, changes in tax law. It's something they seem to talk about every few years. However, it hasn't happened yet. Thank goodness. Remember, municipal bonds are good for investors in high tax brackets. Why? Because of the tax-free interest income, of course. The 10K filing for a publicly traded company must be accompanied by an auditor's report. Which of the following opinions is most desirable? We mentioned this earlier. It is an unqualified opinion that is the best type of opinion you can get. Of the following, which correlation would show two assets that move in the same direction? It has to be positively correlated. So what are our choices? Positive 0.8, positive 0.5, positive 0.75, or negative 0.5. So positive 1 would be perfectly positively correlated. So the closer we can get to that, the more the assets will move in the same direction. The formula for working capital is... Working capital is a formula that is found from some numbers on the balance sheet. It is current assets minus current liabilities. It is a dollar amount. It's not good for comparison purposes. If you want to compare from one company to another, you want the current ratio, which is current assets divided by current liabilities. Which of the following is not considered a defensive sector? Defensive sectors resist market cycles: consumer staples, healthcare, durable goods, utilities. So no matter what the economy is doing, I'm going to turn my heat on if it's winter and snowing, or air in Arizona in the summer. Healthcare, I still need to go to the doctor. Consumer staples are everyday items like food, basic clothing, dishwasher detergent, things that you're going to have to purchase, so they are defensive. Durable goods involve assets that don't quickly wear out, like a refrigerator or a car or a washer and dryer. Durable goods are things that you tend to purchase as a consumer when we're in an economic contraction or an economic expansion. In an expansion. If we're in a contraction, you're going to fix your washer, right? You're not going to buy a new washer. So which one of these is not defensive? Durable goods. Durable goods will expand during an expansion and contract during a contraction. The other three choices are all defensive, resisting market cycles. All of the following are defensive industries except. So there's a data bank of questions underneath this, and I never know which 20 questions I'm going to get, so that every time you take the test, you get a different experience. So just happen to get two of the same type of question in a row. That's my luck. Food, utilities, auto industry, pharmaceuticals. So we're looking for what is not defensive. The auto industry. Cars are a type of durable good, as we just learned. The September 11th terrorist attacks were sudden and unexpected. This represents which of the following types of risks? Market, country, opportunity, geopolitical. This represents a type of risk that is being studied more and more today, and that is what is called geopolitical risk. So geopolitics. If I was going to go back to school and get my PhD, I might study geopolitics as it relates to economics. I find that just fascinating. This might be a new definition for you. Geopolitical risk is broadly defined as the risk associated with war, political upheavals, inter-country tensions and terrorism, and captures both the occurrence of such events and the escalation of the probability of such events occurring. The September 11th terrorist attacks represent geopolitical risk, specifically an exogenous event, sudden and unanticipated. Interesting. The current ratio is liabilities divided by assets, assets minus shareholders' equity, current assets divided by current liabilities, assets divided by liabilities. The current ratio is a ratio that's good for comparison purposes when you're looking at two different companies. It is current assets divided by current liabilities. Working capital is a dollar amount, not good for comparison purposes. It does measure a company's ability to withstand a short-term economic crisis, since current assets are assets like cash and inventory, accounts receivable, things expected to be cash in the next 12 months. Marketable securities owned by the company fall into there. Current assets minus current liabilities. Current liabilities are monies owed in the next 12 months. So working capital dollar amount, current ratio is a ratio. You want it to be greater than 1 to show that the company is financially healthy, that they're liquid, that they have more in current assets than they owe over the next 12 months. In the United States, we use the blank to measure inflation. CPI, GDP, PPI, GNP. We use the Consumer Price Index to measure inflation. It measures the cost of a basket of goods, same basket of goods in all these different cities across the United States. When things get more expensive, then we have inflation. PPI is on the producer level, and certainly the CPI, there's lots of different CPIs that you can look at beyond the scope of this test. Woo! You did it 100%. Good job. I hope you learned something. Thank you so much for watching. I think it is one of the hardest sections on this exam. If you would like to check out PassMasters course offerings, there is a link in this video's description. Be sure to give this video a thumbs up, subscribe to our channel, and turn those notifications on so you'll know when we release another video. Keep up the good work. Series 65 is a beast of an exam, but I know you can do it. Happy studies. Study, 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 pass.